income support to farmers. Now, NABARD's All India Rural Financial Inclusion Survey made the following observations. Around 10 crore rural households out of the 21 crore households are engaged in agriculture. However, the monthly average agricultural household income was mere 8,931 in 2016-17. Currently, it's around 10,000 rupees in 2020-21. Even for the so called agricultural households, just over 43% of their average income comes from cultivation of crops and rearing of animals. 41% of the rural households are indebted, out of which majority are agricultural households, 43%. Now, only 26% of the agricultural households out of the total rural households have any kind of insurance. Only around 53% of the agricultural households report savings in a financial institution, indicating low level of financial inclusion. The above findings conclude that farm income levels are not satisfactory, making agriculture a non-profitable enterprise. A sound income level gives a sense of security to farmers and encourage him to take risks. Having a high income promotes farmers to invest more in agriculture by adopting new technologies and purchasing better inputs like high quality seeds and fertilizers, which effectively increases agricultural productivity. A fair level of farm income also leads to socio-economic development of farming households, reduces rural indebtedness, and minimizes farmer suicides. Moving on to PM Kisan. Now, PM Kisan is a central sector scheme implemented by the Agriculture Ministry in which all farmers, irrespective of farm size, will get up to 6,000 per year as minimum income support. The amount will be paid to each eligible farmers in three installments and will be deposited directly in their bank accounts. Aadhaar is compulsory for farmers for verifying his identity, although it has been kept optional for the first and second installments. The objectives of PM Kisan are as follows: to augment the income of small and marginal farmers, to supplement the financial needs of small and marginal farmers in procuring various inputs, to ensure proper crop health and appropriate yield, commensurate with anticipated farm income at the end of each crop cycle, to protect small and medium farmers from falling into clutches of money lenders for meeting such expenses and ensure their continuance in farming activities. However, there are some issues with the scheme which needs to be addressed. Now, rupees 6,000 may not be sufficient to cover the rising cost of inputs like seeds, fertilizers, labor wages, etc. The scheme excludes landless farmers whose name is not in the land records of state and union territory. The central scheme overlaps with certain state government initiatives like Telangana's Raitu Bandhu scheme. Also, some of the state initiatives like Odisha's Kalia scheme offers wider coverage by including even landless farmers and tenants. There are possibilities that income support being provided to the farmers under PM Kisan may not be on may be used on non-agricultural and non-productive activities like alcoholism. The income support would require huge budgetary allocations and may strain centers' finances. Moving on to Kisan Mandhan Yojana. Now, government has launched the PM Kisan Mandhan Yojana with a view to provide social security to small and marginal farmers in their old age when they have no means of livelihood or minimum or no savings to take care of their expenses. Under the scheme, a monthly fixed pension of rupees 3,000 is to be provided to small and marginal farmers subject to certain exclusion criteria or on attaining the age of 60 years. It is a voluntary and contributory pension scheme. The eligible farmers is required to contribute a pension to a pension fund between rupees 55 and 200 per month depending on the entry age. Now the central government contributes an equal amount to the pension fund. Small and marginal farmer, who is a farmer who owns cultivable land up to 2 hectares as per the land records of the state, in the age bracket of 18 to 40 years are eligible to join the pension scheme. Farmers who are not eligible to join the schemes include small and marginal farmers who joined the PM Shram Yogi Man Dhan Yojana, National Pension Scheme, EPFO, or any other government run pension schemes. Now, farmers owning more than 2 hectares of land are also excluded. All persons who have paid income tax in the last assessment year are also excluded. Now, raising farm incomes, doubling farm income by 2022, the government launched an interministerial committee in April 2016 to examine issues relating to doubling of farmers' income and recommended strategies to achieve the same. The doubling farm income strategy, as recommended by the committee, includes seven sources of income growth, which are improvement in crop productivity, improvement in livestock productivity, resource use efficiencies or savings in low cost production, increase in cropping intensity, diversification towards high value crops, improvement in real prices received by farmers, shift from farm to non farm occupations. Now, moving on to farmer producer organizations, that is FPO. A producer organization is a legal entity which may be a company, cooperative society, etc., formed by primary producers like farmers, milk producers, fishermen, weaver, rural artisan. Now, farmer producer organization is one type of producer organization where members are farmers. Through the formation of FPO, the farmers will have better collective strength for better access to quality inputs, technology, credit, and better marketing through economies of scale for better realization of income. Also, FPO increases the bargaining power of farmers as it allows members to negotiate a group and can help farmers in both input and outputs. Currently, there are over 5,000 FPOs in the country. 20% of these are struggling to be viable, and 50% are in mobilization stage only. Now, Small Farmers Agribusiness Consortium is in its recent strategy paper estimated that only 30% of the FPO have viable operations. Now, some of the challenges faced by FPO in India include difficulty in mobilizing farmers, improper management, limited membership, inability to access to credit, etc. Now, SFAC in its strategy paper also lists out a few challenges like farmers' limited understanding of business, the need for incubation and handholding, as well as constraints in rising equity capital. Another major issue is that farmers producer companies do not have technical and managerial expertise to carry on their requisite work, including forward and backward linkages, best agricultural practices, seed production, value addition, branding, etc., to make their business operation sustainable and more profitable for all stakeholders. In order to address these challenges, Ministry of Agriculture and Farmer Welfare launched a central sector scheme which is formation and promotion of farmer producer organizations. Objectives of the schemes are as follows: 10,000 FPOs will be formed in the 5 years period between 2019-20 to 23-24. Handholding support to each FPO would be continued for 5 years from its year of inception, for which support will continue till 2027-28. Beneficiaries of the scheme are small and marginal farmers. Now, cluster based business organizations will be formed at cluster or state level for implementing the scheme. At least 15% of the target FPOs would be in aspirational districts, with at least one FPO in each block of aspirational districts of the country. Now, FPOs will be promoted under one district, one product cluster. FPO can be further strengthened through various policy and structural reforms, including technology support, financial support through customized service and loan products, and marketing support in various market available. Moving on to National Policy for Farmers 2007, the broad areas of its coverage include: focus will be on economic well-being of the farmers in addition to production and productivity. Assets reforms to ensure that the farmer's household in villages either possess or has access to productive assets or marketable skills. Water use efficiencies for maximizing yield, income per unit of irrigation water in all crops production programs. New technologies like biotechnology, ICT, renewable energy, space applications, nanotechnology will be encouraged for improving productivity per unit of land and water on a sustainable basis. National Agricultural Biosecurity System would be established to organize and coordinate agricultural biosecurity program. Quality seeds, disease-free planting material, and soil health enhancement hold the key to raising small farm productivity. Accordingly, every farmer is to be issued a soil health passbook containing integrated information on farm soils with corresponding advisories. Adequate support services like creches, child care centers, adequate nutrition needed by women working in fields would be funded. The financial services would be galvanized for timely, adequate, and easy reach to the farmers at reasonable interest rate. Gyan Chopals at village level, with the help of ICT and farm schools in field of outstanding farmers to promote farmer to farmer learning would be set up through the state government for strengthening extension services. Necessary steps would be taken to put in place appropriate social security schemes for farmers. Minimum support price mechanism, that is MSP mechanism, will be implemented effectively across the country so as to ensure remunerative prices for agricultural produce. Food security basket is to be enlarged to include nutritious millets such as bajra, jowar, ragi, etc., mostly grown in dryland farming areas. That'll be it.